Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, the market is down a little bit after the Fed announcement that it looks as if we're going to have a 0.75% interest rate raise here. Not not unusual, not surprising that this is going to happen. And it did have some effect on the market. Today, basically the Qs were down a little over a percent, 1.21%. The Spider, which of course covers the S&P 500 indexes, that was down too, unfortunately. And the Diamond, which is the Dow Jones, this is the ETF that covers the Dow Jones, that was down 0.27. So the least damage was in the Diamond. The techs are continuing to get hit, and unfortunately, with higher interest rates, growth stocks just are not going to perform as well. That's just the way it is. We're going to see probably better performance in stocks that are related to commodities, but even they got hit today too. So it's kind of a kind of a mixed bag all the way around. I want to kind of go into a stock that I shorted today. It's Lennar. They just came out with earnings. The earnings were good. The problem, of course, for Lennar is a very interest sensitive area in the market. And unfortunately, when the interest rates go up, and 0.75% doesn't sound like a lot, but believe me, it is when just about 6 months ago, the average home price, the home interest rate was under 3%, and it's headed towards 6%. So a 0.75% interest rate raise is very significant, and it will, unfortunately, I believe, affect the ability for a company like Lennar to sell homes. And even the existing homes that they have probably will not fare as well. So, there's going to be a lot of people that unfortunately were able to qualify for homes prior, but not unfortunately now because of the interest rates raised. I mean, we're going to see some adjustable rate mortgages and that kind of thing, but it just doesn't look like it's going to be as good as it was. Lennar is fairly strong in the homeowners group. Now, Lennar is the largest home builder, excuse me, in the United States, and but it comes in about number four. I do think it's going to weaken primarily because many of their communities, they're still building, and they're going to end up with a lot of inventory. They're starting to cut prices, and it's just a tough go all the way around. If you're watching us on YouTube, just if from TikTok, just jump on over to www Dallas Trading Floor, or you can just go to the the link that is in my bio. So just go up to the bio, click on the link, and you'll be able to get to that as well. So kind of interesting there. All right, so let's. Oops. Well, no, goodness. Uh, yeah, we had an issue with the. Okay, yeah, there we go. So I'm going to show you the 5-minute chart for Lennar. Let's see if we can do that for the people on TikTok. Let's kind of move it over here to the 5-minute chart. And there we go. See, and we'll show you exactly where we came in on that short. As you can see, we basically shorted right here at about 77.87, and unfortunately, it dropped today. Well, not unfortunate for us, but unfortunate for the other people. Did drop down to a little right about 76. I think that's where we're going to get some support. As you can see, at the end of the day, you just started to see people starting to sell. So here's my strategy on Lennar. I will be in it probably, hopefully, if it moves down. If it moves down more than about 5 or 10%, I'll probably close the trade and buy back the shares. But if it goes up 5%, of course, then I will be stopped out. And the stop on this one that I've put in, anyways, is right at 81.86. So if the stock were to reverse and go higher to 81.86, I have a stop loss set, and of course, it's a buy stop. It's a buy stop limit order, which means that it'll execute if it moves above 81. 86. So hopefully we will see that not happen. Hopefully it'll go down. If it goes down, of course, in price, basically that will allow us to buy the stock back at a lower price. So that's kind of what we're looking for here on this short. Show you the stocks that I have long currently. I only have two stocks long. They were both off today. One of them, of course, is probably a stock that I've been talking about for a while. It's PBR, not Pabst Blue Ribbon, but Petrobras. Uh, it's the stock that is the Brazilian National Oil Company. Symbol on that one is PBR, and it was off today, just slightly, not a lot, but it's still off. So down is down, and that's the way it is. I hope that we're going to get some support on this one. I'm looking at possibly getting I think it's gonna get some support. Hopefully at the 21-day line here, and if we flip on over for people on TikTok here. There we go. All right, so this is kind of where it seems to be getting some support at that green. If you can just see it, that green line. Let's look at the technicals here. We are basically below, we're almost right at the 21-day line at 0.95% below the today line at 1356. I definitely think we're going to probably see some support here. Why? Because there's a lot of programming traders in this stock. And of course, they use the index lines to calculate their buys and sells. Taking a little sip of tea here. So that's kind of where I think we're gonna have a line in the sand. We're still, I still think that we may reverse higher off this. Then I'm going to reactivate activate the reversal line. I think we're seeing a cup here, and it's not really showing in this. This is kind of the high cup with handle, but I definitely think we're going to see hopefully a reversal there. And I do have a stop loss in, of course, on this as one as well. So we will see how that lines up. I also have I also have a position in LNG. This is the liquefied natural gas play. It's called Cheniere. I'm still very bullish on this due to the fact that the in the EU, they've been having difficulty, unfortunately, with both electrical supplies and heating supplies, and natural gas makes a big part of that up. So, with Russia losing now in the war with Ukraine, I think that we're going to see some constraint on the natural gas. So companies like Cheniere are going to hopefully be able to come in and take advantage of that. They have two facilities, one in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas, where they take natural gas and then they freeze it down to basically really close to zero. I mean, way below zero, turns it into a liquid, and then they transport it on ships and kind of like big thermos bottles with that float. That's sort of what they're like, and then on over into Europe. I do think that we're going to see a lot of demand for that, just because the prices. Natural gas has been pulling lower a little bit, but I still think that we're going to see some higher prices there. All right, in the small portfolio, basically only holding one stock currently. Wow, that's amazing. I'm only holding one stock. I'm basically short one stock, which is Lennar. I'm long LNG and I'm long Petrobras. That's it. Not a lot of stuff. Not a lot of stuff. They're mostly in cash, taking a kind of a conservative look towards that. So, thanks for joining, and let's get into your questions. Here's somebody that he says he has Apple at 159.50. Should I let it go? Well, I think probably, but let's look at it exactly. This is a question that's coming in here from a user on TikTok, and that is Apple AAPL. Basically, they're asking at 159.50, where should what should be happening here? So let's see if it'll let me. There we go. hopefully gotten rid of some of my problems with infrastructure, but we don't know. We've been kind of freezing up here on the internet. Okay, so basically, is it 159? And the question here really, and this is really this is really a question. Um, basically, oops, this is a this is basically a question. How low should you go? All right. Now, currently, Apple closed today at 159, 153, 12. The person is asking here about if I bought it at 158.5, should I let it go lower? Well, I'm seeing a continuation of a trend here, unfortunately. And that trend, unfortunately, is down. We're definitely below that 200-day moving average, and we pulled down basically to the higher high. So of here. So we definitely have a lot of selling coming in. The question really should be, how should we look at this in terms of in terms in how I would look at it, and I would look at this in terms of do we have are we down? How far are we down? So let's take a look and see um, how far down we are currently. So I'm going to go in here and get the calculator out. There we go. All right. So we got the calculator out here. And hopefully that'll launch. Looking for it to launch there. Okay. Well, did it launch? I can't tell. So, all right. There we go. There's the calculator. Sometimes it doesn't come directly up. So, all right. So here's the calculator, and this is a question for TikTok. So basically, here's how you calculate that. You're going to put in your 159. And we're currently, let's see how far down we are. We're at 153.12, and this person bought it for 159. And 159.75. Is that did I get that right? Yeah, 159.50. So let's get that in there. All right. So currently we are down about 4% here. We're down about 4% on we're down about 4% on TikTok on this thing. So I I might hang in there just a little bit longer. Um, just a little bit longer possibly. Um, and if we did hang in there a little bit longer, I would let it go basically at 4%, at 5%, 5% lower than you bought it for. So if we calculate that pretty easy, you go one, um, let's see, 159.50, and then multiply that by uh, 0.95. That would be 5% below where you bought it. So I would probably cut my losses here on this one. If I, on Apple at 151.52, that's where I would probably be cutting. That's probably be where I would be cutting my losses on Apple. I do think that the trend, unfortunately, for Apple is moving lower. So, here's the thing: money is flowing out of the market right now. With these higher interest rates, we're still looking at a situation where it's going to move out of the Nasdaq. The Nasdaq is the most interest rate sensitive index, and Apple AAPL dominates the Nasdaq. So I would probably be cutting my losses about 151. So that's sort of my take on it. You always want to, you never can tell, but you always should be, especially in this market. I think you need to cut it a little bit quicker. No, I never like to have anything go against me more than 7%. So I think if you cut it at 5%, you're going to save yourself some money because unfortunately the downward trend here. So I think you got to be super careful. All right, Charles, thank you very much. Oil. Yeah, what's going on? What's going on with that oil? What's going on with that oil stuff? So let's take a look at the black gold. I'm going to look at the XLE first, and the XLE, of course, is the Spider Select It's called the Spider Select ETF, and it covers the energy sector, which is mostly oil. What happened today? Well, I think that it's getting some support right here at the 50-day moving average. So I'm still relatively bullish on oil. Why? Because if you look at the XLE, it's got this cup pattern with this handle, and that indicates, at least to me, it's probably going to go higher. The thing about it is that we're right before an election. Typically, oil prices move lower up to an election, then magically they reverse higher. So I think that we're still in a good situation for oil. The question is, what can we buy in the oil sector? I want to look just really quickly here at Oxy and see how that's checking in on that. I don't own Oxy, but I like Oxy a lot because I think it's well positioned in a lot of ways. Yeah, see, there we go. So let's I'm guess what I'm going to do here is I'm going to take off some of these comments so it's easier to see kind of what's going on here. There we go. All right. So, oops. Let's take those comments off. There we go. Okay. So here we are with Oxy, OXY, of course. What's happened, I think, is we did have, this was a reaction to the interest rates here. But again, I think that we're going to get some support, probably a little bit below the 50-day moving average. But I definitely think we're going to get some support there. Why? Because I do think that, unfortunately, inflation is raging. Interest rates going up will put less money in people's pockets. Now, there's going to be some demand destruction for oil and gas, but at the end of the day, people have to drive. So I wouldn't be giving up on oil so quickly. I still think that we could see a bounce here, at least on the XLE. So and on Oxy. Now the question is, can this be bought? Let's take a look. It's got a pretty good checklist here. This is Oxy. It's an 89. It's an 89 list. On the pattern recognition, we are below. We're about 9% below that cup with handle. Again, this is a powerful formation. Now, of course, if everything in the market goes down, it's going to be it's not. There's going to be no place to hide. But let's just look quickly at how Oxy potentially is doing against the broader market index like the spider. Let's look at the spider, and as you can see, we're still, Occidental Petroleum, oops, is definitely outperforming. There we go. Is definitely outperforming the broader a broader market index like like the spiders. So here's the thing. I definitely think that we're going to see more damage, unfortunately. But Oxy, even though it's down today, as you can see, it's down a little bit here. It has been. I still think the overall trend of Occidental is very good. As you can see, it's moving up there like that. So, this is a potential stock that you could get in any energy sector. But in the short term, it's been coming down. I think we're going to see it stabilize. If we get a green day tomorrow, this will I think this will probably turn around. So just my humble opinion on that one. All right. Here's a question from Sam. Thank you very much again. How low go your take on Tesla? What's on Tesla short? Thanks. Here's the thing. I'm not as confident on shorting Tesla, and there's a lot of reasons why. Tesla's kind of an interesting stock in that it's really a market. I don't think it's going to. Um, it's got this kind of fixation with the about the $300 level. So here we go. Let's take a look at the chart here at Tesla being at about the 300 level, and what's happened is that we've come down. We've tested at the. You can see this red line. This is the 50-day moving average. We tested there, we bounced. Um, we came up to the 200-day moving average, and then we've gotten some resistance. So there's definitely resistance right here at about 300. There's still just a lot of overhead supply. If you can look back, kind of in the Wayback Machine, and you're gonna have to. This is unfortunately off the screen for the Tesla people, but since it made its high basically in December, Tesla has been trading in a range. It's come off the bottom now, but there is resistance at about 300. So I just don't think this is a good short, just because I want to see things that are going to be more. Uh, I, I think they've got a full order book, so they're going to continue production. They're going to continue sales. So I don't think it's necessarily a good short. I just don't think it's a good anything right now. I think it's going to go sideways. So I would stay. I wouldn't be shorting Tesla here. I just wouldn't be shorting Tesla here. I want to short something that's very interest rate sensitive, and of course, that's for me. That's the home builders. That's the home builders. I think the home builders are very, very interest rate sensitive, and I don't think they're going to hold up as well with this interest rate, right? So, but I wouldn't probably do anything. I probably wouldn't do anything um, with Tesla stock right now. I just think you just got to wait and look and hope and all that other stuff. All right. What do you think about the spider? This is a question coming from TikTok as well. So let's take a look at the spider. And of course, for everyone out there, is the spider is the ETF that covers um, the S&P 500, and that's what that is. So let's click on over with TikTok. Okay, super. Because this is a question coming from this is a question coming from TikTok. So I want to make sure that everybody knows that. Yeah. This is a TikTok question on the spider. Unfortunately, as you can see here, I'm going to move it right over. There we go. Currently, spiders at 377.45, and unfortunately, it's down after hours. So this is just telling me, there's just weakness on the overall market. How low can it go? That's the question, and that's also the question with limbo dancers. But I definitely think it can go. See, I believe that we're going to see a little bit of resistance at about 362, but I think it's going to go lower than that. My guess is we're going to see about 320 on the spider. I think by the end of the year, I think there's a very, very good chance that we could go much lower on the spider. So I would not be buying the spider here. Absolutely. I just would not be buying the spider here. It's too risky, I think, to buy at this point. So I don't think it's a short either. I think it's just, kind of, it's kind of like Tesla. It's an index. That's really all it is. All right. Are there any safe haven stocks? That's a great question, Charles. I really appreciate that. I don't know if there are. I think that one of the best stocks that you can be in if you are in raising in a rising interest rate environment is a stock called the TBT. Now, this is an ETF, but it moves with the market in that it was down a little bit today. But as the interest rates move up, this one sort of moves up as well, and it's pretty strong. In that, I definitely think you could definitely be in this one. As the interest rates move up, typically um, this will appreciate. As you can see, it's been staying very nicely above that 10-day moving average, and it does have a cup with handle formation. So I think this one potentially is a safe haven here. I wouldn't. The best safe haven right now, in my opinion, is cash or short. So I would probably be on the side of probably more cash and less stock at this point. Because I do think we're going to move lower, and it's one of those things. I mean, I think that the spider could move lower, and so that's a different. Jim, I'm short Costco oh, excellent, at the 450 strike. This is interesting. I mean, obviously, and I think you're right about this, Jay. We're going to see a lot of weakness in retail, and so Costco, being one of the leaders, like Walmart, could see a lot of damage. And so let's sort of look at Costco, the chart right now. So you said you're short at four at wow at at 450. So we've got a fair ways to go. We've got 50 to go, so we've got a fair ways to go down here. We're um we're on earnings, so I think that you might see a drop definitely. I don't know if we'll see a drop down to this, but I think if we have negative earnings, and I don't think we will on Costco, but if it doesn't meet expectations, then I think it could definitely go lower. I would probably, if I were doing this myself, I would probably be waiting until the earnings announcement and seeing kind of where that goes. And but this could do very very well. The question is, if you're at the 450 strike, the question is how far out are you? So that's a good question. All right, is it a good time to be buying leverage ETF short period only? Well, it depends. Isn't that an evasive answer? Well, it depends. Well, of course it depends, but the thing about leverage ETFs, especially in this environment, I want more and more. I know that you want more juice. I totally get it. I totally get it, and why you'd be interested in some of the leverage ETFs. But I think in this kind of environment, negative interest rate environment, I think you got to be real careful with leverage ETFs. And here's why. I don't think that you have the direction wrong. I think your direction is right because I think we're going lower. But the problem is, one of the things when you get markets that pull back like this, you need to be very, very careful because some of the strongest rallies happen in these bear markets. And we're in a bear market. I mean, there's just no ifs, ands, or buts around it. So if you're in these average ETFs, especially if they are a bear ETF that's leveraged, you can get really, really hurt with these. So I would be very, very careful being in leveraged ETFs, especially if they're short the market. And it's just because one of the things on the way up, typically, you have your ETFs, your leverage ETFs will perform for a while because things go up slower, they come down harder typically. But the problem is when you're coming down, when the market's coming down, what they call the dead cat bounces can be very, very harsh. So I think I would probably personally stay out of some of the stay out of some of the leveraged bear ETFs for at least for right now. I just don't think it's necessarily a good move personally. All right, question about NVIDIA, and this was such a tremendous performer. I was in this one. I definitely like it, but NVIDIA has some problems, and of course, the problems are it is the chips have been hurt in a lot of ways, and it's been it's been a tough market to trade the chips. Really, there's only a few that are doing really well. There is a company called On Semiconductor that I like, but the problem with NVIDIA and a lot of the other companies, especially in the AI space, is that they depend on TSMC, Taiwan Semiconductor Manufacturing, to make their chips. And unfortunately, with the tensions with China, it's making it much more difficult for them to be in it. So overall, here's what I like to say about um, NVIDIA. NVIDIA is in the downward trend. I mean, there's just no two ways about it. I mean, there you go. There's the downward trend for NVIDIA. And of course, I'm a trend trader, so I like to be always in stocks as they are trending. So I typically don't like to buy stocks when they're in a negative trend, and this is definitely the case, unfortunately, with NVIDIA. It's trading below its 200-day line. You really shouldn't buy anything long below that 200-day line, and it's trading below that. It's also trading below the 50-day line, the 21-day line, and the 10-day line. Notice how it's backwards. If this stock were appreciating, you'd have the 10, 21, 50, and 200-day line, but they're reversed. So this is telling us, hey, it's coming down. Now, when it comes down, you see it doesn't come down all at once. It kind of bumps down, and there's every time it comes down, then there's some selling and it moves up, but it's sort of stair stepping down. So I would not be a buyer of Nvidia. Let's take a look at you see we're 42% below the last pivot, which was 230 days ago. So it is not headed in the right direction. It's also got a 44 checklist. This is sort of telling the tale. I am not a bottom dweller. I don't like to buy off the bottom because it can continue to move lower. And unfortunately, I think that may be the case here. We're also 8% below that 21-day line. That's just telling me that we're going to see maybe bounces on the way down, but unfortunately, it looks like Nvidia is going to move. Let's take a look at technicals to see if there's any hope here. And what I'm doing here is, of course, I'm looking at some of the technicals. I think we can see it there. We definitely you see we had in the last 3 quarters, we were just chopping along, doing great stuff. Last quarter, before the in the April quarter, we're our sales were up 46%, but guess what? They were only up 3%, so there's a huge drop off in terms of sales. NVIDIA, unfortunately, their profits were down 51% over the last quarter. So, again, we have issues here with NVIDIA. Also, if you look at what's happening, NVIDIA is warning now that they're going to have a 24% uh, decrease they're going to have a 24% decrease. So it does not look good. Unfortunately, it was looking 2020, 2023, looking out a year. They're looking at the market contracting about 24%. So that's significant. So I would be very careful right now with NVIDIA. Unfortunately, NVIDIA is like many stocks, very, very dependent on interest rates, especially the semiconductor stocks. So you have to be careful when the interest rates go up. It really everything keys off of that, and you just have to be super careful. And it's a great company, but I don't think it's gonna do much better. And I think it's not gonna, at least for this year. I think it's gonna be down this year. All right, Matt is look wants to take a look at FREY. I'm not familiar with this stock. Let's look at it. FREY and take a look there and see. Wow, this is a oh yeah, I heard about this stock. I don't know much about it. Let's get it over there. This is interesting. Yeah, this is a Norwegian company. And I have not been. I'll be honest with you. I have not been following this. So I'm kind of looking at some of the charts here. Let's go to the daily chart on it. And I want wow, look at that. That's interesting. It closed at 1518 and it was up wow, 1,000 and well, this is up tremendous. So somebody likes it. That's true. Definitely look at that. This is the largest. So somebody's coming in here and buying. There's absolutely no question about it. Let's just see if there's any kind of fund sponsorship. Well, it does appear that there's about 80 funds in the really. Let's see if I know about any of these funds. Let's see. Um, yeah, it's very interesting. Let's see if I can possibly look at who's in this stock. We've got VanEck Global. Okay, that's not a bad one. These are pretty well rated funds. These are sort of A funds. Interesting. So this is very interesting. So somebody's buying here. I don't know what it is. Maybe this is Janssen Natural Resources. Just don't know who. So right now, the biggest owner in the funds in the natural resources area is they own a little less than 1% of the stars. That's VanEck Global Resources A. That's interesting. That's a very interesting one. And that's an A plus fund. So, wow, that's looking very promising. Very very promising. The question is, would I buy it? Well, I don't know if I would buy it at that level. I just don't know. But wow, it's definitely intriguing. It's definitely intriguing. So, what would I do here? Well, let's see. Let's go over here to kind of on the fundamental analysis here, see if we can do that. We still are pre-revenue on this one. Yeah, so this is definitely a much higher risk stock, but we went positive on the earnings. That's very interesting. The cash flow has been negative on this one. It's coming out of that. So really kind of like an IPO almost. It's going in there. You know what? This is very, very speculative. I like this one. I would watch list this one. I would not be a buyer here just because I'm a little bit too in this kind of market. I'm a little bit cautious, so I would watch list this one um, for now. Because even though it looks very promising, I just think that in a downtrending market, buying a stock like this, if it's very speculative, could be difficult. So I probably would not be in it. All right. Well, thank you very much, everybody. We're almost out of time. So I would watch this fry on this one, and I definitely would take it out. Let's see if we have one more question from Tech Talk. Let's go over there. Flip the camera. There we go. It's my we talked about NVIDIA. Let's see. Tesla. We talked about that. Apple, again, you're down about 4%. I would cut it at 5% on if you have the Apple one. And that's it. Okay, well, thank you very much, everybody. I will be back, of course, tomorrow. And if you want to get in on the action trailer, it's super easy to do. Please, and this is always put this out there. Um, please like our show. We like when you like our show because it definitely helps us with. So hit that, smash that like button, and also if you want to sign up for the free action trailer, it's super easy. Just go to www.dallas Trading Floor and over there. And if you're on TikTok and you want to get on the free action trailer, it's very easy to do. Just go to my profile, click on the link, and you'll be able to see all the stuff there. And I will be back tomorrow at 5 o'clock. And happy trading, everyone. I'm largely in cash right now. I do have that one short, of course, on Lennar that we talked about, and I'm long two other things that are in the oil and gas area. But right now, not a great time in the market. Needs to be a little bit cautious. I'm mostly in cash. I'm about 85% in cash currently, looking for opportunities. And of course, I'm going to try to present as many opportunities as I'm seeing on this show every day. So if you can subscribe to it, you'll get the notifications. Click that notification bell, so I always say. And I'll see you back here tomorrow. Happy trading.